Hello everyone. So everything is okay. Stock market is at an all-time high. Unemployment is at an all-time low. How many jobs are out there is an all-time high. Everything is great. Nothing to worry about. Nothing to fear. Go out there, spend money, buy stocks, buy bonds. Everything's okay. Nothing to see here. Hey everyone, I'm David. So does that sound familiar to you? Because that's exactly what Ben Bernanke was preaching in 2009, literally right before the housing market crashed. And they asked him during that Senate hearing, so Mr. Bernanke, how does the housing market look? Housing market is strong. We're having a great economy. Everything's going wonderful. Nothing to fear. Everything's great. No worries here. Now, think about it. That's exactly what they were saying in 2009. I hate this thing. And now they're saying it again. The stress tests have come out positive. Everything looking great. Now, let's just break that down a little bit. So first of all, let's look at the stock market. All-time high. Like, that is ridiculous. The only reason why the stock market is high, and we've talked about this before, is because companies and organizations are able to do buyback stock, to be able to buy back their stocks, to artificially inflate the price. Deutsche Bank that just got 18,000 jobs that they're going to be cutting in the next year. Like, one of the largest banks in the world. Everything's going great, but yeah, we're going to cut 18,000 jobs. Now, it's not the Federal Reserve, because the Federal Reserve is what dictates monetary policy in the United States. However, Deutsche Bank is another investment bank. They're getting out of the equities market completely. So with the stock market at all-time highs, but yet not everything. Let's go looking into the jobs market. So you look at unemployment. Unemployment is at an all-time low. Now, we've discussed how these numbers are created and how these numbers are actually dictated. And so with the unemployment, unfortunately, the way that they determine unemployment rate is by how many individuals are actually filing for unemployment. Now, you tell me, how many people do you know that do not have a job that are still not filing for unemployment or at the unemployment office? Now, unemployment you get after you've lost a job to no fault of your own, and then you could possibly get income while you're looking for a new job. It doesn't last forever. Depending on how long you worked and how much you got paid will determine how much you'll be able to get through your unemployment benefits. That's not what we're talking about. We're talking about strictly unemployment and individuals who are actually claiming that they are not employed and are looking for jobs, or of course receiving benefits of unemployment. Now again, back to my original question. How many individuals do you know that do not have a job and are still not seeking employment through the unemployment office? I can think of like 5 people, 10 people right now out of the top of my head. And I'm pretty sure if I sat down and really thought about it and really looked and talked to people, I could find probably hundreds, hundreds, whatever. So that number is skewed. When they say our unemployment rate is at an all-time low, all they're really saying is that more and more people are not seeking employment through the unemployment office. And so that number is ridiculous to look at to determine the economic status of our society, or of our economics. Now, let's look at what we talked about, jobs. The jobs are at an all-time high, meaning that there are more jobs out there being filled now than ever before. Okay, let's look at that number now. How do they determine that number? Well, they determine that number, of course, by how many individual companies are paying for employment taxes, basically. How many jobs have they created out there? Like if I go, like me, I go open up my business, I hire an employee, I start paying employee taxes. Bam, they just got another number on their employment list. But how many jobs are out there? Now, this is extremely skewed because there are, and again, how many individuals do you know that are working more than one job, more than 2 jobs, more than 3 jobs? I know somebody that has 5 jobs. I'm not even joking. They have 5 individual part-time or less than part-time jobs that they go through in a 7-day period. A couple of them in the same day. So again, how many people do you know that are working more than 1 or 2 or 3 jobs? So when they say that, yes, we have a lot of employment right now, there are more jobs, more individuals holding jobs now than ever before, well, that number's skewed too, because like I just mentioned, they're going off how many jobs have been created and are being filled out there, not how many individual people are occupying individual employments. So these numbers are just extremely skewed and does not tell you at all whatsoever the real outlook on the economy. So now if we take the real numbers, which I don't know how we're even going to be able to contemplate, but we could think about it a little bit and say to ourselves, well, how many individuals are now looking for jobs compared to how many individuals are working more than one job? And you can kind of get through mathematical equation, get a number out there to tell you a little bit about where we really are at. Now let's go back to the stock market. All-time highs. Why? Not because the companies are making more money, not because the companies are expanding or are being more profitable, but because the companies are actually buying back the stocks that individuals are selling because they see that companies are failing. Company fails, you sell off the stock price goes down, other people can bring it up, maybe the company bounces back, makes a new innovation, makes new services, start mixing more employees. But the reason why I'm saying all this, you guys, is because you got to think about when we turn on the tube, turn on the TV, turn on the news, and they're like, wow, everything's great. Go out there and buy a house. Go out there and buy a car. Go out there and take a vacation. Go out there and buy Christmas presents for all. Black Friday comes, stay out all night long and spend all your money. Why? Because everything is great. You don't have to worry about losing your job tomorrow. You don't have to worry about economic crashes. You don't have to worry about individuals not going out and spending money anymore. Everything is great. Everything is awesome. Nothing to worry about. Nothing to see here. Okay. Now we're going to look at the world. Now, look at the world. Deutsche Bank, 18,000 jobs, gone. And that's just to start. That's not to determine exactly what's going to happen in the future. That's just what exactly they said was going to happen now. That doesn't mean that in a month or 2 or 3, they could be like, wow, it's worse than what we thought. We're actually going to have to cut 40,000 jobs. File for Chapter 1 bankruptcy. I mean, this is happening all over, guys. One way I like to tell individuals, get an idea about where we really are. Go through the town that you're in. Whatever town it is, small, big, large, city, whatever. And I guarantee you go down, especially like the financial districts or where there's, a lot of personal businesses. And you're going to see a lot of empty stores. You're going to see a lot of empty parking lots. You're going to see a lot of bare buildings. You're going to see a lot of nothing, no businesses, nothing. And I don't care where you're at. I don't care what city you're in. I don't care how prosperous it may be at the time or may look to be, or how maybe parts of the city are prosperous. But I know that every single city out there is hurting. Some more than others, of course. But I know that if you just go driving through your city, go through residential areas, you're going to see a lot of homes that are not being occupied. Now, it might not look like they're being sold, but because what's going on is that a lot of banks own these. The Federal Reserve actually souped up a bunch of homes in the equities market when when they in 2009 and 11, when they just swooped up through quantitative easing and bought all these assets. They're just sitting there. And when they in the homes, they're like, oh wow, man, it's perfect time to buy a home, because why? There's not that many homes out there, and if you want to get a home, you got to go out and get it now, because you don't really have a lot of choices. That's manipulated also. And this isn't a conspiracy theory. Nothing that I'm saying here is, oh, it's a conspiracy and no, this isn't really happening. No, this is happening, folks. They buy up all these houses and they don't put them on the market. Why? To manipulate the home market. Because if there's a lot of, again, supply and demand. If there's a lot of supply and a little demand, then the prices go down. If there's little supply and a lot of demand, prices go up. It's just simple, basic economics. Now, if the banks own a bunch of these homes and they don't put them up for sale, well, then there's less homes on the market for sale. And if there's more people looking for homes and less homes out there, well, then prices are gonna rise. So, but still, and not only that, there's a lot of investors, foreign investors, who have come into America and souped up a bunch of homes and properties. A lot of Chinese have come in, and foreigners have come in and souped up a bunch of homes, and they're just sitting there. Nobody's using them. Literally, they're just sitting there. And so all of this comes into play when it comes in to say, like, how well we're doing. We're doing that well? No, it's all propped up, you guys. It's all like a show and a game. And this is why I express so much that we got to protect ourselves. And how do we do that? I mean, think about any other way that we protect ourselves. How? With insurance. We purchase insurance to protect ourselves just in case anything happens. Health insurance, car insurance, home insurance, flood insurance, life insurance, you know? Has anybody ever heard of wealth insurance? Because when I started getting into this, and I started looking into preserving my wealth that I was accumulating, I said to myself, well, where's the wealth insurance? Where's the companies that are going to sell me insurance to protect my hard-earned gained wealth? And I got to tell you guys that it's out there, but they don't want you to know about it. Why? Because the wealth transfer. If you never heard of a wealth transfer, it happens all the time. Wealth is never destroyed. It is just merely transferred. And these banksters, not gangsters, but banksters, have got this down to a science, to where they're able to manipulate the markets and continuously transfer wealth from the middle class to them, making everybody poor, subjugating to the wealthy. Wealth transfer. So how do you preserve your wealth? How do you ensure your hard-earned wealth? Now, some financial advisors, which I am not a financial advisor at all whatsoever in any form at all. I am a wealth preservator. I help educate individuals on the resources to be able to preserve your wealth. Now, why? Again, we have insurance for everything. Why wouldn't you get insurance for your wealth? Your hard-earned wealth that you've gained for so long, that you're putting into the bank, that you're doing this and doing that. Wouldn't you think, and you're buying insurance for everything else, wouldn't you think you'd want to purchase insurance for your wealth? Now, I more like to call it wealth preservation, that you're going to preserve your wealth and this wealth transfer that the banksters have. But it is really an insurance on your wealth. An insurance like a hedge. And they're going to say, oh, gold. Yeah, gold. But how many of us can purchase gold? And gold is at an all-time high right now. Is it really the best purchase looking at an economic standpoint? But silver, you guys. I know. And you think to yourself, silver, like that's poor man's gold. Like these Germans that have gone over the years have literally made it to where they don't want you to even like silver. They don't want you to even look at it. They want the powers that be have made it to where they call it poor man's gold. Who wants to be called poor? I don't want to hold something that's for the poor. Do you? I mean, they made it so much to where It's so unliked, so unloved, so undervalued that people are throwing it away. They are throwing silver away, you guys. Like literally throwing it away. It don't matter. It don't care. It's just a little bit and it ain't worth anything anyway. We are treating silver today, folks, as an industrial metal when it is not an industrial metal. It never has been and it never will be. Why? Because it is a precious metal. Not only does this silver of one of the major forms of real money, but it has literally so many medicinal and beneficial properties to it that we've discussed in the past, that it is not an industrial metal. It is not to be used and abused and discarded like it's nothing. And that's exactly what we're doing to silver right now. They have been caught manipulating the silver prices to astronomical levels. Silver in 2011 was hovering around $40 and $50, you guys. And it is at $15 right now. Literally like 75% cheaper than it was 6 years ago and it was 40 years ago. And there's way less of it above ground and there's more demand for it. So come on, like this is basic economics again right here. However, because of the price manipulation, and if you understand how the stock market goes, the way that the global spot price is determined is by the trades at the COMEX of how many paper trades that they do. So literally they're trading 180 paper silver ounces for every one physical. So there are 180 paper traded ounces on the stock market for every one physical ounce of silver. So let's just say that even a quarter of these individuals that are holding paper silver assets say, I want the physical. Deliver me the physical. There's not going to be enough. And it is going to crash. The price of silver is going to skyrocket. And I believe, and you know, I'm not this particular expert in precious metals or in financial advisors, but just looking at on an economic standpoint, on a basic, common sense, that silver is going to make some huge gains, large gains. It is going to have to reevaluate to the point to where it's going to be profitable enough to open silver mines. I mean, you guys, there aren't even any silver mines open at all. Silver, right now, the silver that we see everywhere is being mined as a byproduct from like copper mines, zinc mines, gold mines. There are no silver mines open, you guys. Silver mines are not profitable. Silver is not at a point to where it's profitable enough to actually open up a pure silver mine. Again, Deutsche Bank and other banks have literally been caught red-handed manipulating the prices of silver to make wealth transfers. So let me tell you a little bit about how this works. The basics. So the price of silver, they buy all these silver paper ass contracts, right? And bam, the price of silver rises because they're buying a bunch of silver. And so investors see this. And the normal investor, when they see prices of anything rising, they jump into it because of the fear of missing out. They start seeing, wow, silver's going from 14 to 15 to 16 to $17. We need to buy some. So here they go, buying silver up because they see it rising. They say, oh my God, it's going to rise. Now's the time. Here it comes. And then once these banksters see all these outside firms purchasing silver or gold or precious metals like they've been doing, bam, then they sell all their stock, they smash the price down, and all these individuals, when they see the price going down, then they sell their stocks. and they land up losing. And who gains these banksters? Because they gain on the spread. So for instance, they buy $17, right? I mean at $14, $15, price rises, all these outside firms come in and start buying at $17. The banksters sell those, what they have, at $17 that they bought at $14, smash the price back down, make the spread, and then all these individuals that bought at 17 will sell back at 14, and then these banksters come in and swoop up at 14 and make the spread again. It isn't too complicated to understand when you get a little bit more into it and you start seeing how these traders work. Now, all I can say is that it is the best opportunity that you can have right now, guys. Like, I'm serious. This is why I'm jumping up for joy right now, because you can go out there and buy yourself an ounce of silver for $15 plus the spot price. And you can literally, if you want to get it to the closest to spot, you can get it for like 59 cents over spot for each ounce if you get generic silver. Now, if you go and get yourself some, government silver, like Silver Eagles, Kookaburras, Philharmonicas, Pandas, stuff like that, you're going to be paying roughly $2 to $7 over spot price. Now, that is like 10 to 50% of the value of the ounce of silver. So depending on how you want to preserve your wealth, just like insurances, there's different types of insurances that you can buy when you're buying insurance for your life, for your car, for your house, for whatever, right? Well, there's different types of preservation insurances that can be purchased. Hold on. Okay, so we're almost done here, guys. Different types of preservation, different types of insurances that you can buy. Now, I'm telling you guys, I can give you a 10-minute free consultation. Just email me, private message me, send me a comment, give me a call. I'll put my number down in the description, and I can help you. I'll go give you a free 10-minute consultation so that you can see the value that you're getting from a wealth preservator, a wealth insurance provider, and knowledge reciprocator. Because we're not taught this in school, you guys. They don't teach us this in grade school, in high school, in college. I don't care. They do not teach you about preserving your wealth. How to ensure that when you start making your money, when you start making it with your career, what are you going to do and how are you going to preserve the wealth that you're creating? Are you just going to do what everybody else does, and when the time comes and a crash happens, just your wealth just taken from you? Just transferred over to the banksters? Just literally stolen, ripped out from underneath your feet? No, not this time, guys. Not on my watch. It is not happening on my watch. It is not happening to you, because you are going today. Give me a call right now. Email me right now. Comment right now so that you can start your wealth preservation, because the sooner you start it, the more insurance that you can get. The longer you can preserve your wealth, it's like building a fortress, you guys. The more and the longer you can build these fortresses and these walls, the stronger you're gonna be. If you only are able to build a fortress for a month and invaders come, how much protection are you gonna have compared to if you were able to build that wall for 6 months, a year, 10 years? These invaders are gonna have a rough time taking what is yours. And this is why I say every day, you guys, start today. Just go 1 ounce. Go buy 1 ounce. Matter of fact, not even an ounce. Go buy yourself a silver dime, constitutional silver, our old money that was real money until 1964 that became just base metals, copper, real industrial metal, not precious. And start stacking. Go get yourself a half-ounce bar, half-ounce coin. I mean, as long as you start somewhere, once you lay that first brick, once you start that foundation, the sky's the limit, you guys. It's only uphill from there. And then whenever it does happen, you're going to be like, wow, I am so glad that I did what I did. Regardless of whenever you started, you are going to be grateful for the amount of wealth and insurance preservation, wealth preservation insurance for your wealth that you purchased, because it's going to be bad, you guys. 2009 was just a preview of what's going to occur. It is just a taste of the wealth transfer that's going to happen. Mike Ballooney says, in every crisis, there is an opportunity. And this opportunity can be yours, you guys. This opportunity can be all of ours. And all we got to do is preserve it. All we got to do is purchase insurance for our wealth. And the minute that we do that, the second that we do that, we're building our wall for the invaders. We're building that moat. We're building that drawbridge. And we're building that army so that when the time comes, we will have that armor. We will have that wall built. We will have that army. And we will preserve your wealth. I mean, subscribe to my page, you guys. There's so many educational videos, knowledge. Now, we get education in school, but we don't get knowledge. We don't get true knowledge. And what we spit and drop on this page is true knowledge. Knowledge that was not taught in school. Knowledge that they don't want to teach you in school. Knowledge that this federal indoctrination that they give us does not at all want us to at all whatsoever know about. Poor man's gold. Well, if silver is poor man's gold, then you call me the poorest man on this world, because this poor man here is preserving this wealth. And when it comes, the time will come, you guys, and it's coming faster and faster. These walls are not gonna fall. If you want to build your walls, subscribe to my channel. Share this with people that you know, because I know you know somebody that has wealth, that are putting it in digital illusions of wealth, paper contracts, you know, these pensions that are going to be taken away. Use this wealth that you have, preserve it with silver, and let me help you. Let me assist you. Let me drop that knowledge on you. 10-minute free consultation, and you will see what the benefits of being a precious metal stacker, getting hooked up with a wealth preservator, and knowing exactly what you need to do to protect yourself. Until next time, I'm David. Hope to see you. Peace and love.